and I was expecting some bullishness from this month, May closure. This month closed above this candle, and as you know, close above indicates not guarantee, but indicates higher prices. And so obviously it's an indication, and you need to build other layer of confirmations on the lower time frames and with the development of the next candles. But this close above indicates to me that we want to reach, as you know, as you can see, we rejected the 50% of this week, this long week that stabbed into this rejection block. Here, a trade that Romeo took, if you paid attention, but we rejected the 50% of this week, closing above this. And so the body of this candle was likely the wick of either the wick of the body, in this case the body, acted like a bullish order block to send price higher to the wick. So this was the macro perspective, and keeping this in mind, on the weekly we can very clearly see that the body refused to close below this intermediate term high inside this daily FVG. But this was pretty inside, so you saw this here when this candle closures, so you need to keep high for potential bullishness. Also, if you want to view the market on a macro perspective, current seasonal tendency for the XY are bearish. I will send you in the chat a photo, schematics of the seasonal tendency of dollar, and in this month of the year they are bearish. So obviously that suggests a potential bullish scenario for pound and euro. So keeping this in mind, on the daily we were consolidating right there. This week was what I called a consolidation week, and it doesn't mean necessarily that you can trade a consolidation week. I will show you how you can trade a consolidation week if you so choose. And an anticipation is look at the money range. You will play this not expecting an expansion because the week will be a range. But I will dive deeper into this on the future lessons. But from a consolidation week, we expect a small body candle means chop on the lower time frame, and an expansion is needed. We expect an expansion next. To time the expansion, that's another topic, and in this case it was the open of the new month that started the rally. So small little Judas of the month and also of the week and rally. So SMT between these lows, as you can remember. But so focusing on this trade, we have this week already closed. So a huge expansion week towards, and the obvious target was previous month high, this. And the high, and listen to this closely. If you study rejection block closely, you will see that rejection block are truly an amazing PDRA, and that they provide a beautiful entry, precise entry, and precise exit, because I always suggest to everyone to close the trade at rejection blocks, unless they are already tapped, obviously. Rejection block, in this case, if you were long from down here, and if you go on my tweet I quote the low of GU and I closed the trade almost here. But if you were long and you were aiming for the week, this week, you would stand all this retracement and chop before the week will be taken. So always close the trade at rejection block, because most of the time they will provide a reaction before the week is taken. So in this case the reaction was already provided, so the probability that price will run through this high, also relative equal to this, was very, very high. So previous month high was the conservative target, and that's where I closed my trade. I didn't hold for this. This was it during the CPI event. But, so, keeping in mind all this, we were in this, I will use the replay that I earned taking this live, but this is what we were seeing. As you know, we plan the week on Sunday, we skip Monday, and we look to enter on Tuesday. And I will expand on that on the next videos. But this was the scenario in front of our eyes. And without the context that I already give you, only looking at this chart, the most likely expansion of the next weekly candle will be towards, at least towards this high. We don't want to predict the closure of the candle, we only want to trade the expansion, and the expansion is all we need. So, let's remove, and so I keep my chart clean all the time. So I want to have only some level highlighted, in this case the draw, and I want to find a higher time frame PDRA, higher time frame relative to the time frame I'm watching the power of 3 of the candle. So on the weekly I don't see anything. On the daily I see this beautiful FVG formed after Monday, and one of my rules, and again I will expand on the rules, I will expand on the system, I will expand on my personal approach later. But one of the rules, if I'm trading the weekly range, and only if I'm trading the weekly range, is skip Monday. So like, if I'm trading the daily, I will skip Asia. And that's some food for thought. But we skip Monday, and we see, I saw this FVG formed. So the FVG paired with the Monday range, as you know, Tuesday has the 70% chance of printing the actual higher low of the week. So FVG, daily FVG paired with the Monday range, paired with higher time frame institutional order flow towards previous month high, this was a high probability trade. We go down to the hourly, the time frame I like to use to frame the weekly profile, and we mark out Monday range in this case, because I'm expecting it to be souped. So Monday is from 17 to 17, the daily range, and I marked manipulation time this line. Try to understand why. I will taught you that, but try to understand why, and give me the answer in the chat. However, Tuesday open as a session consolidates around where 50% of Monday range, CRT candle range. This is the correct way of using candle arrange, candle 1, candle 2, Tuesday, candle 3, distribution, Wednesday. However, Tuesday opens, consolidates, 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 fake breakout, all the buyers, and I have some, I don't know if you saw, but someone on the UTS group actually bought here, but consolidates, consolidates, false retail trap there, of course someone bought here, breakdown, someone sold down there, break up, rejection block, and fast, sharp move into our higher time frame PDRA, higher time frame key level, below, stabbing, this is a stab, a fast move and a failure to displace below this low, creating also an what the fuck is the an SMT divergence with pound. So British pound, no, sorry, with the euro. So euro, I'm down. So euro failed to take Monday low. So what the fuck am I doing? So GU created a lower low while AU failed to create higher low. And if you watch my recent lesson on SMT, I talk about this. And if you, I said, always trade the stronger pair. And in this case, euro made a higher low. But the reason, and euro expand also, so there were no wrong answer in this case. But the reason I choose, and I saw euro, but the reason I chose to trade GU, and as you know the delivery was far cleaner, was because on the higher time frame, on the daily, it was far bullish than euro. As you know, it was far bullish than euro. The probability were higher, the setup was cleaner, far cleaner. And so you need to factor in also the higher time frames before taking a decision on which pair to trade. Or you can trade them all. At the end of the day, even if you choose the slow pair, the weaker pair, in this case, both will move upwards because they are correlated pair. So if you are right, the trade will be played out anyway. The SMT stronger versus weaker trick is a more advanced topic, and I gave you all you need in that lesson. Also factor in the higher time frames. That's why I choose GU. However, Tuesday, let's come back to us. Tuesday, stabbed, candle number 2, stabbed into our higher time frame key level. At what time of the day? And on UTS, they asked me, how did you enter right here if there was no lower time frame change of state of delivery, even on the 15 minute? Yeah, there was this that actually supported price towards the Asian session of Wednesday. However, I didn't wait. I entered here. And the reason I entered was time of day. It was towards the end of Tuesday candle, and there isn't an algorithmic mathematical way to say this. It is the experience, and with the experience you will begin to trust price action. You will get a feel for price action, but I will explain the better I can. So it was here the candle, the actual daily candle of Tuesday closes on 17, 5 p.m. So from the open on 17 to the close, it was a consolidation, seek and destroy profile, fast move down, and this was towards the end of the candle. And as you know, Tuesday will make the higher low 70% of the time. With an SMT, I entered here confident that towards London close and New York close price will move upwards and Asian session won't take this low out. However, my stop loss was a bit conservative and I put my stop below this hourly wick consequent encroachment. So my stop was at, if I remember the level correctly, was here, more or so. Yeah, my stop was just below the consequent encroachment. Highly unlikely to be tapped, but if it was tapped, I wanted to see a immediate reaction from Asia. As you know, Asia spikes, but didn't take out this low. So my idea was not even closely invalidated, and the trade looked like this. Entry, a stop loss, target 1, Monday high, target 2, previous month high. This was the trade. And yeah, so partial at Monday high, closed the trade here. Could have let a partial in hindsight from previous, the high that I talked about, right here. However, hindsight is a dangerous beast. In this market condition, I prefer to keep this. I risked 0.8% to make almost a 7.5% return, a 7% return. It was the trade, clean one, nobody taking it, nobody, and the cleanest one of all. I hope you enjoyed, and see you in the next